Hi guys, this is Khalid Saifuddin with the gold technicals and trading signal for 30th September 2025. And we're going to discuss the geopolitical situation also and what fundamentals can impact the gold situation right now. Okay, so the first slide here. Gold remains underpinned by the geopolitical tension. And what are those tensions? Central bank policy outlook, global demand for safe haven when the war zones are active, while US yields and the dollar index continue to see the short-term tone. If you are looking into the US dollar, you can see their exhaustion in dollar. So the market is primed for the volatility with any escalation in global conflicts or an unexpected shift in Fed guidance. If we go by the recent development with the agreement between the Israel and Arab countries for the 20 points agreement, if this happens, then maybe US dollar may get better. So, and you know what, if the US dollar goes up, it highly impact gold. Going to the next slide, geopolitical uncertainty. Basically, these are the primary bullish driver, the ongoing Russian-Ukraine conflict. You know that the meeting with the President Trump has already failed, and Russia is showing its aggression against Ukraine. And plus, recently in some part of Western Europe, Russia noticed with the drone attacks, which is just signaling its aggression and its intention about the ongoing war. Moreover, the Middle East tension, which is not yet resolved, so that is also an important role. And then last but not the least, US-China relationship will definitely keep the safe haven in demand, because that is not going to settle right now. It takes time, or it may not be. So any headline escalation tends to trigger immediate inflows into gold ETFs and futures, regardless of macro data. And here, US dollar and treasury yields. Gold has an inverse correlation to the US index. You know that. That's why we always discuss US dollar index, right? So a weakening dollar or failing yields increase gold's relative attractiveness as a safe haven or a store of value, right? And Federal Reserve interest rate outlook, if we look into that, the Fed latest communication point towards a slower pace of easing, but market continue to price in eventual cuts in 2025. Lower yields and a softer dollar journal favor gold. Conversely, it Fed rhetoric turns hawkish. Again, gold faces resistance. You know that. Continuing that in the another slide, geopolitical uncertainty. Central bank purchases, right? Global central bank, China, India, Middle East, have been steadily adding to gold reserves, a structural pillar for demand, right? Any surprise data on reverse accumulation can act as a medium-term bullish catalyst. ETF flows and investor sentiments. ETF outflows have been a headwind, but stabilization or net inflows would provide support. Retail and institutional allocation remain highly sensitive to both macro data, jobs, GDP, and geopolitical headlines. Here, if I differentiate that, see the upside possibilities, escalation of Russian, Ukraine, and Middle East conflict, surprise dovish tilt from the Fed, right? Larger than expected central bank purchases, especially China. These are the possibly bullish triggers. And if we look at the downside possibilities, stronger US economic data, hawkish Fed commentary on delay in the rate cuts, sustained ETF outflows, reducing speculative institutional support. These are the possibility of downside in gold. Going to the next slide, which is my conclusion. Gold's fundamentally lean constructively bullish into the coming week, with geopolitical risk and central bank demand providing a firm floor. However, the short-term direction remain hostage to US yields and the dollar. Expect headline. I always said that. Keep on checking out the headlines, what is happening in the global screen. So expect headline-driven spikes on geopolitical events, but for a sustained rally above resistance, market will need confirmation of Fed easing or renewed institutional inflows. In short, gold is a defensive buy on dip, but rallies may be capped without macro confirmation. Here, it is more important to understand the interpretation of that fundamental development also. If you don't interpret properly, then you can catch up in a trouble, right? Well, I'm here trying to make my point as a fundamental. Now I'm going to discuss the technical values here also, because that's really important, right? So going to the technical, I want you to understand we are in a long for last couple of calls and already achieve enough or more than our given targets in our daily calls, and momentum of the bulls is still favoring the bulls. A strategy, what I suggest is maintaining a long position with protective stop loss at 38.51. Even you can have a stop loss below 38.62 if you are a short-term trader. As price advances, trail the stop loss upward to secure your gains. If you are exiting on your trailing stop loss, that's not a trouble. The overall situation is still support bulls. What we can do, we can again enter on dip. Contingency, if 38.51 is broken and sustained below it, then the long position can find with the problem and will wait for buying on dip for fresh long. Up to 38.62, I don't see any trouble, but breaking 38.51 can be a possibility we can buy on dip. Overall upside focus, bulls may continue pushing towards 38.82 levels. I'm not recommending short right now. However, the sign of exhaustion below around 38.82 will be a possibility of short on strength. Furthermore, I am updating with the levels to understand how to follow these levels and how to follow my strategies and call. We are having this all the details with the appropriate disclaimer who understand the market. And last, I like to tell you, if you like to have these daily calls and live market support during the market, before the New York opening and before the Europe opening, which we send in a PDF format, and before New York opening in an audio format. If you like to have these, you can contact 92345 619 0443 on WhatsApp or 0345 619 0443. Thank you very much for watching this video.